Hey guys, welcome back to the Acosta E.T.F channel. I'm your host, Lewis, and in this channel, we focus on all things engineering, technology, and finances. Today, we're going to talk about 529s and how to save for college using 529. So it's no secret that the cost of college is rising rapidly. Not only is the cost of college rising rapidly, but also student loan debt is rising rapidly. And if we can see over here in this student loan debt statistic article by NerdWallet, we see here that the United States as a collective owes 1.6 trillion in federal and private student loans as of March 31st, 2021. That's a real problem that we have here, and arming yourself with the information necessary in order to make smart financial decisions is a way that we can combat this problem. All right, so let's take a look at what a 529 is. A 529 is an investment account in which you can use to fund educational expenses. So what are some of the benefits of having a 529? Let's take a look at 3 benefits. So one of the benefits of having a 529 is you get state tax deductions. So if you live in a state that has state taxes, you can use a 529 in order to save for educational expenses and be able to take a tax deduction in your state taxes. There's going to be a link in the description of a state tax calculator that you can use to figure out if your state has any benefit with tax deductions using a 529. Now the next benefit is tax deferred growth. So with this benefit, the earnings you have in your account are not subject to federal taxes and in some cases state taxes. Now the last benefit is tax-free withdrawals. So with this benefit, you will not be taxed on the earnings for any qualified educational expense. So let's take a look at some of those educational expenses. They can be tuition for college, university, a trade school, vocational, and some expenses associated with apprenticeship programs. Room and board also applies, books and supplies, computer hardware, software, and you can also, and this is recent, pay for K through 12 of up to $10,000 per student per year at a public, private, or religious school. Okay, so jumping into what are some of the things that you look for in a 529. So some of the things to look for are low fees, any state tax benefits, and lastly, a good selection of investments to choose from. The next step in our process of understanding a 529 is how to know how much money to save in the 529. You want to find out what the percentage increase per year is for your particular choice of school. And once you know the percentage increase, you can then apply it to the tuition that you have in today and be able to project how much tuition would be in the future. Once you know how much tuition is in the future, you can then back out from that number and figure out how much money you need to save per year. Now, for some full context, we're gonna take a look at Amelia, who's my daughter.
I got a wedgie.
You got a wedgie? Oh no, let's fix it.
Much better.
Much better?
She just turned 3 in August, and when we did her 529 savings plan, she was actually 1 at the time. So we're gonna take a look at her numbers and what we are doing in order to make sure that she has enough money to go to college. So let's take a look at this example. So at the time of me doing this analysis, and this was again back in June of 2020 when Amelia was 1 and she was getting ready to turn 2 in August, she had 17 years to go from that point when we started saving. In our area in Central Florida, we have a great college called University of Central Florida. And if we were to take this college and take a look at what the tuition was 17 years ago, which was in 2004, tuition costs were $2,962. As of June 26, 2020, tuition now is $5,954. So how do we calculate the percentage increase? So the percentage increase is the increase in the number divided by the original number, multiply that by 100, and you'll get your percentage increase. So in Amelia's case, when we're looking at her tuition, The increase is $5,954 minus $2,962. That gives us our increase amount. And we're going to divide that by the original number of $2,962, which was the tuition back in 2004. We're going to multiply that number now by 100, and we're going to get our percentage increase. So that percentage increase was 101%. So 101% divided by 17 gives us 6% per year increase. Now that you know the percent increase per year, you can take that and apply it towards tuition. So let's take a look at that analysis now. You can take our 6% increase year over year and you can apply it to tuition. So we can see that for calendar year of 2021 into 2022 for tuition and fees, you'll get a total of $6,329.89. Going to calendar year now 2022 to 2023, you can take the same formula as before and add the 6% increase year over year, and you're going to get $6,729.52 for tuition and fees. So you're gonna do that for the next 17 years. And in my case, when Amelia was 1, 17 years will put her at 18, ready enough to go to college. But keep in mind another note that you want to continue doing the analysis for an additional 3 years, because 17 years from now would mean that she's 18, and for a 4-year degree you're still missing 3 years. So make sure you calculate 3 years as well to figure out what you're going to need for not only freshman year, sophomore year, junior year, but also a senior year. Now that you have your total number of what you need to save, you can then divide that into 17 years to save for that money. Now let's take a look at one of the beautiful things about a 529, and we're going to use Amelia's example in order to illustrate how you can leverage your 529 in order to pay for this. All right, so here we have Amelia's 529, and Amelia, as of today, as of this recording, 9/7, where she just turned 3, Amelia has a total of $12,334.66. Now, if we take a look at that, right, and here's where the interesting part is. So of the $12,334.66, $9,379 was really principal, meaning money that I put into the account, my wife and I put into the account in order to save for Amelia's 529. The beautiful part about it is the earnings, if you look at it. So she has earned today $2,955.66. So in other words, the money that we have invested, and as you can see here, the funds that we have chosen in order to invest them in. So we have an aggressive growth portfolio, a mid-cap stock index portfolio, a growth stock index portfolio, a value stock index portfolio, and a small cap stock index portfolio is how we spread it out, her allocations. But the interesting thing here is the almost $3,000 that I have in this account is $3,000 that I didn't have to go to work for. We're gonna take a look at what the performance is, and if we take a look at what her performance has been in the first year she has the account, she's made a 36.76% rate of return on her money. So this, ladies and gentlemen, is, you know, the beautiful thing about compounding. So if her account performs the same way as in next year and we continue to fund it the way we're going to fund it, you're going to see that the money that's in there plus the earnings is going to earn the 36% on top of that if the account does well as it's doing today. That is how folks pay for these expensive colleges, and they use the power of investing in compound interest in order to be able to leverage your assets and your abilities in order to pay for college. All right, folks, so there you have it. We just took a look at what a 529 is and how you can leverage a 529 in order to help you pay for college. So we took a look at what some of the benefits are for having a 529. What are some of the things that you should look for when it comes to a 529? We also took a deep dive into understanding how much money do you need and how to save for it. And we took an example of taking my daughter, Amelia, we took a look at her 529 and we saw how well it was performing and how we're projected to do in the future. So if you have any questions, go ahead and put them in the comments below. We do our absolute best to make sure that we help out each and every person. Also, if you found this video to be helpful and of value, go ahead and hit the like and the subscribe button, as we are constantly producing new content on engineering, technology, and finance. And more importantly, if you know anybody who needs help in saving for college, make sure you share this video with them so that way they can understand how to leverage the tools that we have available in order to help them pay for college. With that being said, we'll see you on the next one. Take care.